Hello to all of you. Well, it's wonderful to be back on another Wealth Partner Update. We try and do them quarterly, and thank you for all of you coming online. I know we only sort of put it together in the last week, but we thought that it was really important that we come to you and we really explain what is going on. There's 5 things that we want to achieve from this Wealth Partner Update. The first one is clarity, so clarity of where we're actually at. The second one is confidence in terms of where we're actually going. The third one is a renewed commitment to our vision and our purpose. The fifth one is the next steps in terms of what we're actually doing. And the fifth one is what's in it for you. We really want to leave, this evening with what's in it for you. So I not only wanted to welcome all the wealth partners that are online, but I also wanted to welcome the 5 people that are joining me, 4 people that are joining me, including myself. So we basically got Ken, we've got Gavin, we've got Richard, and we've got Hilda, who are all online. And I don't know if I need to introduce everyone because I think most people know who they are, but I'll start with Hilda. Hilda and I have known each other for more than 5 years, and she's one of the major anchor investors within the business. She's recently immigrated to America, and so it's coming live from Austin. So it's early in the morning there in Austin as an American citizen now. And then working right to left, we've got Richard Dunn. Richard and I have known each other for more than 10 years. He basically was integral in a company called Ozinvest, which was the biggest property investment company in Australia. And in 2008, 2009, they found me. So I'll talk later about that in terms of an affiliate, and channel partner strategy. And I was actually one of their clients. And I don't know, Richard, I think we were doing about 9 to 12 sales a month on average. And I watched in that space, their company actually double their sales in less than 12 months. I then watched him go on and do it for another company called Ruach, where they not only did it in Australia, but they went into Southeast Asia. And in recent years, even the stuff that he's been doing in China. And obviously he's been helping us on the acquisition side to date. But, I think there's so much untapped potential there in terms of, the global capacity in terms of the demand side, which we'll talk about later. Gavin, many of you have heard and spoken to Gavin before as our CTO and building our technology. And he's going to be sharing with us tonight where we're at from a technology perspective, and more importantly, when our version 5 comes out in the marketplace at the end of November, what that actually means. And then Ken Williams, again, you've heard quite a lot from Ken. I met Ken probably just over a year ago now. It was about June last year. And what was quite interesting to me is I said to him at the time, I've got a gut feel that our head office would be out of London. Ken has been an investment banker out of England for nearly 20 years. He's raised over $8 billion himself, personally, over 80 different deals. And so has extreme experience in terms of investment banking and the whole funding space, etc. And is going to be taking us through that in terms of the process. And is also a board member and is looking after the head of our strategic finance. And then just from my side, you can see there that the title is CEO. Most of you think that stands for Chief Executive Officer. It doesn't. It stands for Community Engagement Officer. I believe that the most important role that we have is growing the community, keeping them engaged, keeping ourselves as a community engaged, and that's really my purpose and my focus in terms of where we're at and what it is that we're doing. So I'll be sort of guiding us through the process. So welcome to all 4 of you. Anything you want to say just before we get going?
Just good evening to everyone.
Yeah, good evening from me.
Hello. Hello, everyone.
I forgot to say, Richard, it's like 3 a.m. in the morning, Brisbane. So we've got London, Cape Town, Brisbane, and Austin on this call. So if we want to talk about global, it doesn't get much better than that in terms of this process. So let's rock and roll. One of the things that I think is important is that a number of people have asked around the communication, specifically with regards to Wealth Migrate. In May, we started the restructure. I put together the Wealth Partner Update on the 7th of June and drove the updates in terms of letting people know what was happening with the restructure. I then put together a Wealth Partner survey, and we actually did the CEO check-ins where we made all those times 20 minutes per person allocation. Now, considering we've got 137 Wealth Partners, you can imagine the amount of time that took, but it was incredibly valuable for me to get perspective from people as to what they were thinking, what the future looked like. And it also really energized me when I realized how many people really believed in the vision and backed us to make it a reality. From there, we decided to do the Wealth Partner weekly updates. So every week we've been giving you a video on what's happening within the business. We did the roadshow at the end of July, and then for those that couldn't make the live event on the 30th of June, we actually did a Wealth Partner webinar. And Martin Freeman from Allvest and myself from Wealth Migrate presented the business plans. We went through the business models, we went through the revenue projections and the numbers. And if people don't have those, we're happy to share them, although Ken's going to go through them again tonight. On the 24th of September, I sent out the CEO letter to everyone. Now, this is quite important. I learned this from Warren Buffett and from Jeff Bezos, and both of them once a year write an annual letter. It reviews what they learned in the last 12 months, and more importantly, it sort of gives a guidance as to where the future is going in terms of that process, and everyone should have that. Today, we're obviously doing the quarterly Wealth Partner update, and then one thing people ask is that every year we do an annual AGM, and when we do the AGM, we actually share all the audited financials. So last year's AGM was in late October. In fact, I was in America at the time, and so if you want the audited financials or anything else, they're there. And obviously, we're coming up to being due an AGM again for 2018, and again, in terms of the audited financials. So that's just it on the communication side. I wanted to run through just some of the highlights with regards to the major themes in terms of the CEO letter. The first one was I got shared a book by Hilda, actually, in terms of new power and old power. Now, I can't recommend this book more highly. And, Richard Branson says it's the best book of 2018. And it's really important, not just for our business, but for any business you're involved in, for your children, to really understand how the paradigms of business are changing. We then looked at the last 12 months, reviewing our wins, our losses, and even our learnings. We looked at the Cedars campaign, which we're going to talk about tonight. And I also mentioned there that I've made a personal commitment to put in an additional 75,000 into this campaign now in terms of this process. Then the fourth thing was we looked at the next 2 to 5 years and some of the threats that are on the horizon and how they equally represent significant opportunities for us. And then finally, I went back to our purpose and what's important and why we're doing it. So let's run through some of the important things here. When one looks at the old power values, people think of it, very formal. It's top down, it's control, it's institutionalism, it's exclusivity and competition. It's really about confidentiality and separating both public and private. It's about professionalism, specialism, and it's about long-term affiliation. When you compare that to the new power models of informal, self-organization, network governance, open source collaboration, crowd wisdom, sharing, radical transparency, do-it-yourself, and short-term conditional affiliation, it really gives you a change, and people really need to understand this. Now, it doesn't make old power bad and new power good, but what's really critical is to know what to do and when to do it. Hilda gave me a good idea over the weekend, and she said, well, look, there's a lot of information there. Why don't you turn it into a framework? And so I tried my best to put it into a framework. And the way I see it, you've got return on the left-hand side rising as you go up. You've got short-term risk increasing as you go to the right. You've got global and purposeful increasing as you go from left to right. And then you've got exponential as you go from bottom to top. So let's look at some examples. If you take Britannica and Encyclopedia, why this is important is that when Britannica, pretty much every single person on this call probably grew up with a Britannica Encyclopedia, at home. And what was interesting is when Wikipedia came out, all the PhDs said it's never going to happen. It's an absolute travesty. They're going to ruin the world's information. And yet today, Wikipedia is the 8th most visited website in the world. They've got 19 million accredited people that ensure the accuracy of the information. And it is the most accurate website in the world in terms of any of us if we want to get up-to-date information. If we compare that with the Marriott hotels and Airbnb, you know that I speak about this a lot. Down in this bottom left-hand corner, you've got old power model with old power values. And in the top right corner, you've got new power values with a new power model. Now, when you look at Marriott, that's all about competition. It's all about top-down control. It's all about owning the assets. They've got 658,000 beds and a staff of over 80,000 people where they manage it, all over the world. And you compare that to Airbnb, which is really tapped into the human instinct of cooperation and working together rather than competition. They've got over 3 million beds around the world, and yet they've got less than 5,000 people, and they own no assets. And there was a great statement by Jessica Zartler that said the biggest shift is happening from scarcity to abundance and from competition to collaboration. Another example, if you take Barnes & Noble, which is, one of the oldest bookstores in America, and you compare it to Amazon, if you look at the old power model, it's all about controlling all the information. They're scared about getting sued. They don't want to, share anything, basically. Whereas you compare that to Amazon, where it's got radical transparency, where they share absolutely everything when it comes to reputation management systems, etc. And the only thing they care about is the customer and how they can make a better experience for the customer. And I'm sure most of you know this, but Amazon in September became the wealthiest company in the world and is valued, along with Amazon, as the only two companies in the world that are valued more than $1 trillion. And then when you take, the average property model or the typical property model or property fund or REIT, it's very much about the old power values. It's about top-down control and everything that I've just mentioned in terms of the other three examples. And when you take Wealth Migrate and a marketplace, it's all about new power values and a new power model. And I think what's really, really important is that you can see there that, the influence on return and on short-term risk, on global and purposeful, and on exponential. But when one takes risk into account, I also believe that in terms of long-term risk, there's going to be far more long-term risk in terms of the older models as they effectively challenge the way that cultures and business are changing. Hilda very kindly put together a framework, and if you can't see this framework on the screen, because I know it's quite detailed, I will drop this into the Global Wealth Group WhatsApp group so that you can go and look at it. But what Hilda's done very effectively here is to look at the examples of a traditional property company or REIT and compare it to a company like Wealth Migrate, which is a marketplace. When you look at the short-term investment risk, 3 to 5 years, the property company over here is low, whereas the marketplace is higher. When you look at the long-term risk, the property company is higher, whereas the marketplace is lower. The property company, is all about real estate. The marketplace is about technology. The investment category is real estate for the property company, whereas for the marketplace, it's technology. The investment class is specific sectors within real estate, like medical or multifamily, whereas again, the marketplace is technology. The exit strategy for a property company is to be turned into a public REIT, whereas, from a marketplace perspective, it's a strategic sale or public listing. The return on capital is sort of 2 to 3x for a property company, whereas you're looking at 10x plus for a technology company. And then when you look at growth, the growth potential in the short term is higher by acquisition, but long term will be more linear. Whereas on the marketplace, it's shorter term, it's got low growth while it's disrupting, but long term, the growth is exponential. In terms of competitors, there's many competitors. In fact, pretty much every property company in the world, anyone investing in real estate. Whereas in the marketplace, particularly global marketplaces, there's no one at the moment. Thus, the barrier to entry on a property is low, whereas on a marketplace is high. The business challenges for a property company are finding good people, staff and investors, and strong deal flow. Whereas from a marketplace, it's growing the technology fast enough to keep up with the trends. In terms of I'm just going to jump through a couple of these things. So the business strategy is a few property partners in niche markets, whereas the marketplace is multiple property specialists in global markets. In terms of level of impact and purpose, the property company is low and it's about personal wealth building, whereas the marketplace is all about, it's very high and it's personal wealth building and making an impact on the planet. And then this is an interesting one. The business main risks is that it's finding the right people, staff and investors, finding profitable deals and competitors. That's the business risk for property. Whereas for technology, it's not building the technology and adapting fast enough. The financial return for property company is short term, for a marketplace is long term. The value creation is in, for property companies in building a real estate portfolio, whereas, for a marketplace, it's building a real estate platform. And then lastly, the focus is stable and repetition versus scalable and digital. Now, I know, Hilda, we're going to come back to you in terms of, what you're wanting to look at in terms of big picture, but is there anything I'm missing? Because this was really your framework. Is there anything that you'd like to just jump in there, or are you happy for me to move on?
So I just, for clarity purposes, put it together for myself as my investment strategy to understand the differences, because every investor needs to have a investment strategy, and because of and strategies sometimes change. So I just put this up, and I thought I'll share that with other investors in the business as we go forward to make sure that everyone understands there's benefits to both. It depends on your strategy, what each person needs to invest in. So thanks for sharing that. I didn't expect you to sharing it on this platform. It was really just how my thinking was. And I hope it helps everybody else when you're in this confusion of who is who and what is what and where should I be going in my investment strategy or life strategy, because they should really be aligned. As I hope that this just gives clarity to everyone.
Awesome. Well, thank you very much, Hilda. So the next question I get asked all the time is why education? And some people see us launching the Wealth University and they think, oh, there's goes Scott, he's defocused again or whatever. But the point being is that I really wanted people to understand the bigger picture. Now, education is really critically important. The first thing is that the most valuable way to do marketing is education. It's called education-based marketing, and it's the fastest way to build trust. When you look at it here, you've got a framework we put together where you've got adoption on the left-hand side and you've got growth at the bottom. Now, the online platforms like Udemy, okay, here, Udacity, Udemy, Khan Academy, have had massive online adoption. But when you take the online investment platforms like E-Trade and Fundrise Realty Mogul, they've had large growth but not much adoption. And the way to solve that, if you overlay the new power model and the new power values, and you overlay the adoption and the growth, like I just showed you, is through education. It's by building trust that you will ultimately build that adoption and really start to have a critical impact. The other thing people don't understand, which we can talk about later, is that there's also no compliance. So you can go and paint the Eiffel Tower, you can paint the Sydney Opera House, and you can paint, a big building in New York, Trump Tower, and you'll have zero compliance issues because there's no compliance or regulation around education. The third thing is that it allows people to build trust. And so what that means is that when they build trust, they actually are comfortable to be able to invest, basically. It dramatically reduces the barrier to entry. If you've got to invest $10,000 or $100,000, that's a massive barrier to entry versus signing up for a free course or even a $20 course. And finally, and probably most importantly for all of us, other than the four things I've just mentioned, is that it also builds multiple revenue streams, which is good for building a strong, solid business. Now, I want to just give you an example of this. I got sent a report just tonight, and you should be able to see the investor test report. So we built the investor test with Suraj. We've now had 702 people take the test from 38 countries. What's interesting is that we've only turned on the Facebook marketing 24 hours ago, and we've had more than 200 people do it in the last 24 hours. If you look here at some other interesting stats, 37% of people are from the age 25 to 34, 57% of them are female, and the ages 35 to 44 were the most engaged. So we basically need 35 to 40-year-old, 44-year-old females. They're the most engaged. You can see the type of things that they enjoy. So now, rather than flying to Durban and trying to put on an event, or London, or New York, or Sydney, this is the way to go with regards to the digital framework. And you can see here all the awarenesses, the market segments. You can see the investor test and the feedback from people. And then also, I'm going to share this with you on the WhatsApp group as well. But this is also people giving their feedback. So now you've got all the reputation management system and the testimonials in terms of what we're looking. The other thing, if you do not know what Udemy is, I've just mentioned Udemy. So let me just go back to here quickly. And if you remember there, Udemy, one of the biggest and most successful online education platforms. Well, we're on Udemy. As of today, our 8 steps to wealth through real estate, which is our micro degree, is now on Udemy. Now, if you want to get to 100,000 members, 1 million members and plus, this is the way to do it, through digital and scalable means to really be able to grow the platform. And so I'm super excited about what's happening there. When you look at the user engagement over time, it went from people consuming publishing to social media to e-commerce, and now we're moving to investment online and what we call social commerce, which is where e-commerce and social media come together. And this is exactly where we're positioning ourselves, because this is where the world is going. And you can already see, even in just terms of the investor test, that it's our target market are the 20s, the 30s, and the 40-year-olds, and with the highest numbers towards females. Then you look at how do we connect them. And so, again, if you understand our ecosystem, whether it's Wealth Create, Wealth Migrate, the Inner Circle, Wealth University, Wealth Assist, and the entry level, the portfolio, and the long term, all of them is a way to evolve. Now, we haven't built this all out, but this is the plan to be able to evolve people through the engagement cycle and what they call the participation cycle. And this is where you can start to see the wealthy coin become significant as the enabler within the whole ecosystem and what it is that we're actually doing. So just in terms of the Wealth University, quickly, this is the investor test. Again, I will put the links in the WhatsApp group. Go and do it. Go and do the test. You will all get a report which looks very similar to this. And you can just see here, this is just a test report, but basically it'll come out. You've got your graph on where you are. It teaches you on where you are, and more importantly, where you need to go. And so there's 5 different pillars, and every single one of the pillars has an area on mindset and knowledge and what you need to do to really be able to improve and thrive in terms of yourself and basically be able to create a personalized path to wealth. Then we've got the 8 steps to wealth through real estate micro degree. I've already shown you that on Genius U. We're putting it on Udemy and a number of other platforms at the moment. And why this is exciting, a lot of people have said to me, Scott, you're traveling too much. I agree with you. When I've got to fly to London to present to 50 or 60 people, or to America, or to all around South Africa or Australia or China or whatever, it takes a huge amount of time and it costs a lot of money. Now we're focusing on everything that is scalable and digital. Then we've got the Wealth Inner Circle. I'm not going to talk too much about this tonight. Richard's going to share some of our ideas around this, but this is really going to take our community to the next level, and specifically also for your children and getting them involved. The Global Real Estate Mastermind, I'm really excited about this. This is a step-by-step mastermind where a few people can work together to become global citizens, and again, working with some of the best in the world. And it's also where we're going to bring together different areas like our due diligence, etc., etc. And then our last one at the moment is our Global Real Estate Blockchain Technology Mastermind that's working with the likes of Paul Niedera and some of the other top minds in terms of where the world is going in terms of technology. And again, for a small group of like-minded people to be able to participate and take advantage. So these are all live and went live in the last month. I wanted to share with you 5 steps to building a community, which I went through at length in the CEO letter. The first one is find your connected connectors. I don't think that needs a lot of explaining. The second one is build a new power brand. Now, a lot of people asked me, and there was a lack of understanding around our ecosystem. And now you can start to see with Wealth Create, the Wealth Movement, Wealth Migrate, and the Wealth University, how it all comes together and how Wealthy sits right at the center of it. It ultimately is the catalyst that unlocks the whole ecosystem and where we're going. And it's equally a very much a new power brand. In terms of lowering the barrier to entry and flattening the path, I'm sure you can appreciate how important it is for us to allow people to invest. When the minimum investment is $10,000, it's very difficult for people to participate. When it's $100,000, they want to get on an airplane and fly to America. When it's $10,000, they want to do a huge amount of due diligence. When it's $1,000, they want to start to participate. But once you start to get it to $100 and they can do it all online in 10 minutes, KYC, money movements, and everything else, that significantly increases the participation scale. And Gavin's going to be sharing with you tonight how we're doing that. Then we need to move people up that participation scale. And I went through this in a lot of detail in the letter, but in the old power values, it's all about just complying and consuming. So just doing what you're told to do and consuming. In the new power values, and particularly in real estate, it's about sharing the information with your friends and colleagues. It's about affiliating and endorsing, which all of you wealth partners have already done, and being part of the global community. It's about adapting and being part of creating products. It's about funding and investing in the platform and crowdfunding, etc. It's about producing, and this is where the real estate partners come in and actually producing quality assets with trusted partners. And then finally, there's shaping, which is where, if you take Wikipedia as an example, there's people that govern how it's going to work and ensure that it's in the best interest of the community at large. So those are the 5 things. And if you take the last one, it's harnessing the 3 storms. And a great lesson I learned here was, in 2015 at the Wealth Movement, we spoke at the very first event in Africa about crowdfunding. And I got, in the press, and the FSB came out and they were talking about crowdfunding, and they said we don't regulate crowdfunding, and it became a bit of a storm in the press. And the mistake that I made, a huge mistake I made, was that I ran away from it, trying to go, no, we didn't say that, and we apologize and whatever. Whereas we should have run straight at it. We should have gone, we do crowdfunding. We would love to work with you, Mr. Regulator, because we know that technology can provide a better experience to the investors. And that's a classic example of running at a storm. In terms of the main participants in the platform, you've got the platform owners, and this is driven by the board and the leadership team. You've got the super participants, which are you, the wealth partners, and also our real estate partners. And then you've got the participants or the investors. Now, just quickly, two things that are really important. One of the most important things in terms of the super participants is that they are the energy of the New Power community. They literally drive how it's going to work. And they need things like reputation management systems. When you take Alibaba or eBay, you can see all the different badges and things that people can make the right decisions about the partners before they actually invest. If you look on eBay here, you can see all the social proofing. You can see, people being able to write comments, etc. Imagine if we had the reputation management with years in business, projects to date, niche focus, amount of money they're investing, the risks that are being assumed, the responsiveness to communication, timing of dividends. Imagine people are complaining about the Cyprus dividends. Well, they'd be able to show it. What about accuracy of returns? If you say you're going to give an 8% return, do you do it? And then finally, having algorithms where the different investors, based on their experience and track record, would be able to rank the partners so that they would get a ranking system. And then on the other side, you've got recognition systems. So people that are participating want to be recognized for that. And, we've got 10 different badging systems on how we can actually do it. For our participants, we've designed all the investor circles, basically, and now this is really how growth can be exponential, because you can have one person, and I'm just going to use Kim van Niekerk in Bedford, who, with her friend Nadine Dixie, went out to the farmers in the Eastern Cape and said, hey, why don't you come get involved? And they sort of got 40 people involved. That's a classic example of how you can facilitate investor networks online, and then they can be sharing badges and information. They can even be competing with each other. And, all this stuff is designed and built. And yet the big mistake that we've made to date is that all this has been built. And so the question people are asking is, why is it being designed but not built? What I mean by built is that it's there, you can see it, but it's not on the platform at the moment. And the reason is that a year ago, we had 1.5 people in technology and 11 people in due diligence, finance, or compliance. And so that's wonderful if you're trying to build a property, fund or a REIT. That's great. But if you're building a technology company, that is not the way to do it. And nowadays, we've got a team of 22 people, and 16 of them are either technology programmers, digital, or something to do with the marketplace. And that's the right way that it should be in terms of where we are. So watch the space, because these things will be coming into reality really, really soon. Even though we consider some of those challenges when it comes to the technology, what I think is really important is when we look at our track record, we've now got members in 118 countries. They've grown by 197% in the last 12 months. We've got investors now in 59 countries. They've grown by over 50% in the last 12 months. Our transactions have grown by 57%. Our equity has increased by 25%. Our deal value has increased by 63%. And our dividends have increased by 68%. And you can see now we've actually done and facilitated over $500 million, as $500 million in US dollars in terms of real estate deals. And I think it's really getting quite exciting what is being able to be achieved. In terms of the business model, I'm not going to explain this in detail. I did on the last Wealth Partner update, and people can watch the recording. But I just wanted to show you here that if your business model is relying purely on doing big commercial deals once a quarter, then you're going to have significant cash flow challenges if you're building a technology business. If you're building a technology business and a marketplace, you need to have multiple partners with multiple revenue streams. And there's 7 different partners and 7 different business models here that we'll be building out in a organized fashion in terms of where we're going. And if people want to, I can go more into that in the Q&A session. And so to finish off from me, every year we do our team charter. And that's really where, we always are building your trusted global real estate marketplace. We've got, the breakdown of who we are as a company and our vision to make investing as simple as a swipe of a finger from $1. Every year we sit and we take our strategic initiatives. So in January this year, we sat with the board, we sat with the leadership team, and there were 5. Number 1 was to build out a scalable tech stack, which was needed to be finished by the end of November. Number 2 was to have 40,000 members on the platform. Number 3 was to drive at least 2,000 transactions through the platform. Number 4 was a revenue focus, and I've changed the revenue number there just for the quarter and since the restructure. And number five was the funding, the strategic imperative from the funding. So just from a leadership team perspective, we broke that down and we made it really simple. From a funding perspective, we're looking to raise $2 million by the end of 2018, and Ken Williams is driving that as the leader. From a marketplace launch, we're launching the scalable tech, but that also includes making sure we got the supply and the demand to do more than 2,000 transactions. And Lyndon, as our PMO, is driving that and working very closely with Gavin, our CTO. Now, Lyndon tonight could not make it for personal reasons, so Gavin is going to be updating us from a technology perspective. And then finally, from a revenue perspective, sorry, just 2 seconds. Good on, monkey. Love you. Okay. From a revenue perspective, again, one of the weaknesses we've had for quite a long time is not having someone specifically focusing on the revenue. And Richard, as I've explained already, is one of the best in the world at being able to do this, and is going to explain our plan in terms of how we're going to raise more than $200,000 in revenue, before the end of the year, and get to 40,000 members. And so, without further ado, Ken, I wanted to hand to you. We'll just go in the order that we've got it here, where I'd like to hand to you to run through the funding and the valuations and the business model and everything on that side. So, if you don't mind, Ken, I'm going to share my screen with you so that you can use your own screen.
Thanks, Scott.
Change presenter, and Ken Williams, where's he gone? There we are.
Okay, terrific. Can you actually see a screen of mine at the moment, Scott?
Not yet. You need to go share screen. I've sent it to you and you need to accept it.
Show my screen, and
there we are. We got you. So we can see your screen now. That's saying financial summary. It's that screen. It's your PowerPoint screen. It's the pitch deck, actually.
Okay, that's not really the screen that I wanted to share, but you know what I'll do? I've got 3 screens here, so I'm just going to move things around a little bit, and we can do it from here. How's that? Can you see that? That's so now we're in the revenue model.
We've got your spreadsheet basically.
Okay, terrific. So thanks very much, Scott. I mean, I think you've made some points there that I'd like to just touch on. First, I think it's just important that everyone understands that, one, I'm a wealth partner, so I'm one of you, but not only that, so is my wife, and then my 2 daughters, 15 and 16. They're both wealth partners too. And basically, I bought into this whole concept. I have my own property partnership down in the southeast of England. I didn't want a property company. I wanted the exponentials that this provided. And I love what Scott was up to, and that's why I'm involved. And I'm loving every minute of being involved. What we do in this context from a revenue perspective, and then looking at the valuation of the business, is you've got to look at it in 3 ways, and this goes right up to the board level in terms of KPIs, in terms of how we're incentivized, and then right through the team. And basically, it's global users, transactions, which ultimately culminates in revenue. Now, what you're most interested to do is really get your transactions flying, because if you get your transactions flying, there are institutions out there that use algorithms to have a look at those that are doing hundreds of thousands of transactions. And on the basis of that, you automatically fit into their sweet spot, and they want to invest in the business. So our audited financials last year saw us at 846 transactions, and we did about 1.3 million in revenue. Okay, so the expectation now is we go to global users of 40,000, so members. We go to for 2,000 in terms of transactions this year, and to 1.5 in revenue. Now, what's really interesting is that there's quite a big jump here, but I just go back to what Scott was talking about. I mean, if overnight we've just doubled in 24 hours the universe that's looked at our Wealth University in 24 hours by using digital marketing, you can imagine how quickly we can actually ratchet up our members and then obviously our transactions. And very simply, what Scott has alluded to for the longest time, it was before I was on board. He said that basically he wanted to get to unicorn status as soon as possible, and basically that was through 1 million transactions at 2,000 US dollars. That's 2 billion at 5%, which would give you 100 million in revenue. Okay. Now, very simply, we've put this model together using contributions from our subsidiary company in China and our expectations. And basically, I point out that we go from 2,000 transactions to by 2025, 2026. And my screens, this is a slightly smaller screen here. We're doing sort of 1.7 million transactions, 1.2 million to 1.7 million transactions. Okay, and what we show here is the percentage that we're charging for equity raise. What really gets me going though is completely outside of this, we are charging, and we have the ability to now charge for supply and for demand. So our partners, Orbvest, actually pay us to be on our platform, and we can take that payment, and I think I'll keep that amount of money to myself at this point in time, but say to you that we could take that and we could do 10 Orbvests, and we could basically cover ourselves, 10 to 20 Orbvests, and we could cover all the costs in the business at the moment. And that's something that we just haven't been doing to this point of time. In terms of the university itself and the greater community down here, you can actually see how this kicks in and where we start to earn revenue significantly outside of the very obvious thing that we're doing, which is providing the globe with access to real estate. So it's a diversified revenue stream. It de-risks us as a business. It's exactly the right way to be going. How do you value a business like this? Well, if we use 218 and we say we're going to do 1.5 in revenue in 218, I'm going to take you into the valuation model that we've put together. Now, first, to point out, this is a pre-money model. Okay, so obviously, if we raise money, that actually changes the valuation of the business. We have used a sum of the parts valuation to do this, and we've used an independent valuation as well. So, if you're sort of thinking, well, these are Ken Williams's numbers, they're not. What I've done is I've used broking and common marketplace valuations that you would all know from holding revenue accounts and stockbroking accounts. And I've just applied this to this model. So first and foremost, a forward price revenue multiple. What that does is that actually takes a forward rolling revenue view. And so we're at the end of 18 here. And so I've taken an average between 18 and 19 to get us to that number. So that's 2.7. And I've put it on a 10 multiple, and that makes us 27 million. And we've got 14.5 million shares in issue, and that makes our valuation 1.87. Now remember, this is platform valuation completely only. I've then taken a historic multiple. So in other words, I've taken actually the valuation at the revenue expectation as of this year, and then I've applied it to that. I've applied our NAV of the business, and so our net asset value of the business is 5 million. I've put those two together, taken the revenue, multiplied it by 10, and put those two together to get to a value of 20. Okay, and that puts us at 1.4. And so we go on. There's a CapEx NAV, which is all the CapEx we've raised plus the NAV. One of our senior wealth partners suggested this model a couple of years ago to Scott, just to show you that I'm actually using his model. And what he suggested is that there's a 20% goodwill element to the ongoing business. So you get out at 17, and you basically apply 20% premium to that to get you to 21. That puts us at 146. What's very interesting is and I'll take you through Cedars when Scott wants to go through that. But basically, Cedars use Equidim as a valuation tool. That's a tool that's completely independent of us. And I actually did this in front of Scott. Funny enough, I did it in front of one of our other wealth partners, and it didn't quite come out where I had expected. But basically, what I said to Scott is you need to be, we must be conservative here, because it asks you for the founder, number of founders, the number of people in the company, how long you've been operating for. It works out a calculation for you, and this is what seeders use. And basically, it took us up to 34 million. And I said to Scott, it took us to 34 because it looked at our 3-year revenue, and our 3-year revenue number is quite big. And I said to him, I think we should use a smaller revenue number just to be conservative. So what I've then done is added all of these together and just a simple average them to get to 23 million, and then divided that by the number of shares in issue to get us to 1.6. Now, just that against our 150 is a 7%. 150 is a 7% discount to that 1.6. I just want to quickly take you back to the model now and show you what this implies. So 150 as a starting price, and that's what we're raising in the seeders campaign. Basically, if I just take you to 2022, and on the basis of our revenue forecasts, we get to like 48 as a share price. Basically, that's 32 times your money. Now, I just want to make the comment, and I've done this with a couple of you that I have spoken to in the past, is basically I've run my own equity portfolio for near on 30 years now, and I'm averaging at about 22.5% in that portfolio, which frankly is better than the fund managers have been able to get me. Now, honestly, fund managers are subject to very strict mandates and performances, and they invest huge sums of money, so they move markets, whereas I can nimbly move in and out without making a difference to the stock price. The fact of the matter is that the best I've done is 22%, and probably 50% on a single investment that I've made. I'm suggesting here that you can get 32 times your money. So let's halve it and say that I'm wrong. We get 15 times your money. Why don't we halve it again? You're at 7 times your money. And I'm talking about in the next 4 years. So, this is why I was so excited about, about getting involved and getting stuck into this. So, what does it then mean? Well, what we've done is for the Seeders campaign, and I'm going to pause just after this. But what we've done is we said everything has to be done at 150. But if you are a wealth partner, and Scott was absolutely adamant that if you're a wealth partner that had invested before, we are offering anchors who bring in, say, 250,000, a significant discount. But if you already were an investor for 100,000, well, we can aggregate that to say that actually the community is offering you something. But and then similarly with 500,000, we offer a very significant discount. All I would say is that we need to raise 2 million, and I just want to then take you to our coin site here and just make a couple of comments around why are we raising, how are we raising, and what the expectation is. This is the coin site. It's it's been up for the better part of sort of a year now. At the bottom of this, we indicated what we were going to be spending our cash on. Now, you've got to realize that if you want to digitally grow like we expect to grow, you've got to seriously fund your technology, and you've got to seriously fund your digital marketing to really, really ratchet up. So what Scott has uniquely done, and this was the reason I had the presentation open, is that he's been able to fund this business through the wealth partners themselves. And I'd just like to take you to one slide. This is versus our competition, and basically he's been able to do this without ever going to Series A. Now, what's important about that is the Series A guy is a sharp-nosed venture capitalist who wants to sell you to the highest bidder in 3 years' time. He's not interested in the environment that you might be growing globally. He's not necessarily interested in education. He's interested in a bonus in 3 years' time. So if you have a look at a snapshot in time for any of our global competitors, and these are the biggest competitors, not one of them was anywhere close to what we've done through our platform at time of Series A funding. what's really interesting is we're not going into a Series A funding round now with Cedars. A Series A round would take us to an institutional investment. And so what Cedars offers us is a fantastic opportunity to get out to the market, raise some money to give us some runway, and then ultimately we can look to raise again next year at a higher price, and so on. But it's important that we understand that Scott, as with the entrepreneurial flair that he has, he must be able to make these decisions without someone sitting as a VenCap 30% player in his business telling him what to do. Otherwise, we're never going to get to the kind of numbers that we want. So that's the end of the financials, Scott. I don't know if you want me to talk about Cedars now, or
yeah, please let's go through the Cedars, because after yourself we'll go to Gavin on the tech side.
Okay, great. So I'll just very quickly mention Cedars and what we're doing with Cedars. So they're two the two better crowdfunders in the UK. And bear in mind that UK is the most progressive by way of regulation globally, are Crowdcube and Cedars. Now, Paul Niederer, as acknowledged by both gentlemen that run those businesses, was a mentor to both of their CEOs. So we had a good in with both businesses. We chose Cedars over Crowdcube for a number of reasons. One was Paul's own recommendation, but specifically Cedars come in as a single nominee account. So even if they raise all of their money, and bear in mind that they can raise from £10, even if they raise all of that money at £100 a time, they only come in as Cedars as one nominee. And so they would like to see the presentations that we give, but they're not going to command Scott to do anything. And they've been highly successful. They've done this 690 times. With one business, they've done it 9 times. So we are being very prescriptive with them. We're running quite a tough interface with them. They're FCA regulated, and we are trying to demonstrate as much as possible that we are here for business, and we could basically go back next year and raise again if we need to. And this is still outside of an institutional investor. And what's so nice about it is if we can do this, and we can get ourselves into a position whereby we proof our metrics, then obviously the institutions will come to us, and then we can go to a useful institution. I just wanted to say, the go live, they are currently from an FCA perspective. They're checking every statement that Scott and I have stated on our video that we've recorded for our pre-registration page. That pre-registration page,
and all the documentation. I mean, it's been a nightmare. But
well, what's nice about that, Scott, is everybody that does listen to this will understand that it's done within FCA regulation, significantly scrutinized. So we will be out to you with an email and a pre-registration page. Now that page basically gives you an immediate click in. You can put your details in there, and you can specify how much you'd like to invest. We can do that globally. So if we submit that to you in social media, you can like it, and it can go to your requisites. So to all the people on your sites and so on. There's no obligation from your perspective. But if they actually think, what, I'd like to have a crack at this for, $100 or 1,000 Rand or whatever it is, then they are welcome to do that. And it would be a fantastic bonus from the community that we currently have. The next thing is we give this roughly a fortnight, and then we decide where we are they like us to raise 50%, and then they raise the rest. And so we're looking at 2 million. At this time, we're sitting at around 500,000 raised from anchors and our community. What will happen is we're going to go to our 20,000 members on the platform digitally to see for interest. Now, ordinarily, they suggest that between 10 and 20% of a platform's members would tend to react to this and possibly invest. We've got 20 million, 10% is 2 million. If they all invested 100,000, invested 1,000. We're at 200,000. So, Cedars is striking at a level of 1.9 thousand for each transaction at the moment. So people could be coming in for 10,000 or higher. That remains to be seen. But after 2 weeks, we may have the million, and then we can say to them, all right, now we're going to raise 2. And that's how that will play out. The idea then is that generally they've been able to close on average 22 days after they open on their platform, but they give us a full 60 days. So we're going to take as long as we need to take, and then Scott is going to be in London presenting. We've got events with Cedars themselves, and then we'll close it when we're ready, and that will be leading into end of November, leading into Christmas. That's all I have, Scott, unless you'd like me to touch on
anything. I just wanted you to share, because you've got the screen. Just you were to show on the Wealthy coin, if we had brought in the 30 million, what the share price would have been.
Okay, yeah. So that's actually a great point, Scott. Is that when you have a look at a capex model like this, and people sort of say, well, why are we talking about this? Why are we talking about valuations at the moment, and so on? Well, the reason is that we need to fund ourselves. Now, capex so far, we've brought in 12 million. If Scott had been successful on the coin, and understand, he wasn't not successful. He wasn't unsuccessful. What he's done is we've kept all the IP. Paul Niedera actually advises a coin exchange. We were precluded from going to a security coin, where it was asset backed, which would make most sense to anyone globally. We weren't allowed to do that at that time. We are allowed to do that now, so we can relaunch this coin, which is completely not dilutive at any time. But if we'd have raised 30 million, look at the stock price. So, 30 million for the platform company only, we would be at 3.9. If we'd have got over the line with the portfolio sale, that was 4 million. We'd be at 428. So, that's post money. So it's a post money valuation. So, with the 2 million, it's going to change our valuation quite clearly. The big thing for me is I'd like to have a way of raising into a significant Series A campaign, after which we then look at a listing of the company, and that's the trajectory.
Awesome. Thank you, Ken, very much. I'm conscious of time, so I'm going to rock and roll here. I'm going to come back to my screen quickly before I give it to you, Gavin. I just want to share very quickly. You should be able to see my screen. Yeah. So just yesterday I was talking to Justin. He's actually on the boat in the Bahamas, and I was talking about the Cedars thing, and he actually sent me this WhatsApp. He said, you have a great story to tell and a big opportunity which no one doubts. I really hope you get the seed money to jumpstart the Cedars funding. That is the way to go for WealthMag. We're actually all in this together. Cheers, Justin. The other thing that I wanted to share with you just very quickly was a couple of key issues. Was that the UK, we've now moved the operational holding company to the UK because it is the fintech capital of the world. So our top co is going to be in the UK. Hong Kong will become a subsidiary of that. The UK board has been set up, and we've had to put it in for Companies House in the UK, and also for the Cedars, being myself, Hilda, Paul, and Ken in terms of that side. So that's all from a fiduciary perspective, all been set up. Ken has also been working really hard over the last couple of months. He is already himself FCA qualified, but we had to put in an application for the company, which will allow us a crowdfunding license, and it will significantly change jurisdiction and regulation around the world. And we're actually in the process of supplying that application as we speak. And then the last thing, which I would just like you to talk a little bit to, Ken, is that since you've taken over from a strategic financing perspective, and I know you and I share the same thoughts here, is that if we're going to be a digital company, then we need to have digital share certificates so that we can build trust and transparency. And you found a company called CoreConnex that actually does everything. It manages all the sort of company records, the capital markets activity, fundraising, share certificates, etc. Just talk to us, for 30 seconds around that, so that we're going to move away from old paper that needs to be printed and is months late.
Absolutely, yeah. So CoreConnex is Canadian based. They're fully regulated, and what they do is they supply global share registers but they do a whole thing off the back of that in terms of a platform integration from a financial perspective, whereby they're able to earn revenue. So we're able to put together, and we obviously are doing this. In fact, they've received our share register. We will have our share register in the cloud, archived for an eternity. You'll receive all your communication electronically, and you'll have an e-cert, an electronic certificate. So you're going to find that the communication with regard to your share certificates and so on will change fairly remarkably. And I just think that that's a great way of, it will allow you login and an ability to communicate if you see anything wrong, or you decide you want to participate further, and so on. So it's exactly the right place to be going. And all I would say is obviously with our spin-off of the property company, that's taken us a little while to get in order. So apologies, for any wait on certificates. Those are going to be coming to you electronically, fairly shortly.
Perfect. Thank you, Ken. And then just to reiterate what Ken said, there's 3 core metrics, and this is going to tie directly into you, Gavin. It's the number of transactions, it's the average fees, and it's the average transaction size. To create $1 billion company, we need to have $100 million in revenue. And to do that, we need to increase the transactions, we need to decrease the transaction size, and we're aiming to do 1 million transactions at an average fee, monetizing supply and demand 5% by an average of $2,000, which is the numbers Ken's given you. So it's just a pictorial. And then just finish off, when you look at what Ken showed you there, I'd like to point out that the projections are on the low road, so self-funded. So continuing with the trajectory we have, if we can bring in, and the plan is to bring in the institutional capital in the next year or two, then obviously this can change dramatically in terms of the investment. The other thing was Ken spoke about the increase in transactions from 5,000 to 50,000 from 2019 to 2020. To put in perspective, Crowdcube and Cedars are doing more than 25,000 transactions per quarter. Okay, so that's more than 100,000 per year, and that's because it's seamless, it's easy, it's online KYC, it's credit cards and everything else. Then you've got the average at $2,000, which is really where you've got to get to, and their minimum investment is £10. And I'm really excited to hear from Gavin about how we can get there. Ken spoke about other revenue streams, both monetizing the supply side and the Wealth University. I think he's spoken about the $100 million, and then also about the share price. As an example, just next year, going from $1.50 to $4 over the time. So without further ado, this is a perfect lead into you, Gavin, because when you look at this numbers where I put the circles around it, the only way that we will be able to succeed like this in terms of the scale is to have a platform that will allow us to be able to increase those transactions, decrease the minimum investment, and to be able to do it in a scalable way. And so I wanted to hand over to you so you could share with us where we're at and what the possibilities are. So let me just hand to you. Can I share my screen with you, Gavin?
Yeah, absolutely.
I have shared, just while we're sharing screens, I have shared this a couple of times, but I think that often people underestimate the caliber of our tech team and some of the people that, not only yourself, but the team you've been able to build around you. And, really, we haven't just managed to get technology people, we've managed to get people that are experts in fintech and marketplaces. And that for me is truly exciting, because we're just at a whole nother level now.
Yeah, awesome. Thanks, Scott. So, there's a couple of things I just want to make sure that we get clear. Is I'm not building the tech. There's a whole team that's building the tech. I'm just the guy that's good at talking in front of people. Another one is Scott keeps talking about version 5 of the platform. I mean, frankly, for me, this is the first one I've been involved in. So for me, this is we're launching our 0.8 version. It's going to be very close to where we want it. And have to be totally honest, we're not going to be finished at the end of November. Like, honestly, I don't think we're going to be finished in 2 years' time. Like, we're going to keep on building this, but we're launching at the end of November with something that can do everything that we need it to do right now, but we'll be able to move it and adapt it and change it so that it becomes the solution we need for next year, because I can't see that far into the future. So that's just that we're clear on those things. So I'm going to run through the tech very quickly. So if you see the login screen, so you'll see there's a little bit of different look and feel. There's a very big, large blue space, which we're going to be using for marketing, helping build trust, testimonials, videos, the kind of basic things that we need to have. So from there, I'm just going to log in. It's showing my other email address over there because I was testing to see how secure we were, and turns out we are, which is nice. Okay, so it's telling me I can't log in. Perfect. Okay, so essentially what I was just doing there is validating to make sure that I am a new user, not an already existing user. So the first thing you'll notice when you log in is what we've got is essentially a bit of a guide for people who've never been here before. So what are the things that people usually do when they land on our marketplace? Well, the things you can do is you can complete your profile, you can fund your wallet, you can go to the university, you can learn more about investing, or you can go and browse through the various investments we have on our marketplace right now. So another very nice feature is that at the top over here, you'll see it says total holdings and wallet. What this is a very quick, easy way for you to see what you have right now, what you have to spend. And as we build it in here, the next piece that will be coming is what the dividends that you've received for the last moving annual, like what your moving annual total is in terms of dividends. So what that allows you to do is very quickly to figure out how is this done for you right now. If you want a little bit more detail on that, you click it down and you'll be able to see a little bit more detail, where you're invested and what is available to spend. And you'll see over here a little piece that says reserved. What that means is how much you've got on indications where you're just waiting for those deals to close. So the next piece from there will take you into an actual property. So you click into your property, you have lovely images. You've got pretty much the same thing that you've seen. This is telling you exactly what you need to know about the property. There's an overview. You can see that this is a great one because it says the returns are high and it's going to be a lot. So this is excellent. You can drill in a little bit of the market summary, investment summary, and you can immediately see some detail on who the sponsor is, who the property partner is. As we start building in things like social proofing, a lot of this will start coming in here. So you'll immediately know who the people are that you're dealing with. We highlight what the risks are. We're open and transparent about what the fees are. And from here, you want to say, okay, I'd like to invest. I invest that much, continue, agree. And then you confirm it. So done. You've now made your first investment. It really is as simple as that. I did a presentation.
It's quite important, Gavin. Sorry to butting in there, but it's quite important. Yeah. And the reason you can do that is because of the wallet structure. So you're not now going off the table and doing a PDF and a blah, blah, blah,
Yeah, absolutely. So because the way we've built the wallets and the wallet structure is we're shifting over to the pre-funded model. And the first piece over here, it'll still be transfer into an account. But the next piece from here is we start doing actual origination on payments. So you'll be able to take credit cards, debit cards. It's fully SEPA, IBAN, wires, basically any kind of payment system that we need. It becomes quite easy for us to integrate those things. And that is obviously a future step. But to get this up and running, we need to be able to construct our wallet and be able to fund and spend from that wallet. That's the important piece. And the other important piece around this is you can only actually spend what you have, which is quite big. One of the largest headaches we had within the previous company was the amount of time it would take to close a deal after the deal was actually already closed. There was a huge amount of manual work that needed to happen where people had to be followed up for money, and it's frankly just not a scalable solution at all. If we have 10 investments on the platform, it's impossible to follow up with 8 or 9,000 people to get them to individually to get them to pay the money over. So that just makes it a proper scalable solution. So we're going to go to the next step, which is our portfolio. So again, you have the same piece over here. You can see what your holding is in your wallet and what's in your wallet. See what your pending investments are. And if you have funded investments, they will go across here. So funded investments is essentially investments that are currently earning you dividends. When they are, you'll be able to see what the return is, and you'll be able to immediately compare it to what the targeted return was that you wanted. So you know what the security is, you know what the value is that you originally paid, and you know what you're making on it. So as we start building this out, it becomes very, very clear to what you're doing. And then if you have a look and you quickly view your wallet, so you can see what is in your various wallets. If you want to add funds, here just as we build this piece out over here, you'll be able to fund not automatically, but you'll be able to do much better origination off of this. And done, and you go back to this page. So it's all pretty simple. So we're for those of you who have seen this thus far, this looks pretty close to a done solution that we can launch and get up and running. The big things that we've got missing is we're currently building out our KYC solution. What this is doing for us is it's allowing us to drop our the barrier to entry. Essentially, when you come in here, you capture your personal info. By the time you've done capturing this information here, which is a reasonably light amount of information, you can already and immediately invest up to $250. You don't have to go and get accredited versions of IDs or anything like that. At this point, you're accredited to invest up to $250 at a time and up to $2,500 a year. So it starts hitting what Scott was talking about earlier, which is the lots and lots of smaller investments.
Yeah, that's significantly important because more than 95% of people fall off through the KYC process before they even get to investment at the moment. And on top of that, again, if you make that first investment really easy, low KYC, $100, I can just participate, which is what you're doing. Because the other thing is that, previously if we went below $1,000, it was a loss leader. Now we can do it at $100. You're even mentioning we do it possibly even at $10.
I mean, in all honesty, the costs for us at the moment are on the deal, not on the investor, which means that if somebody's investing $100, it doesn't cost us anything different to somebody investing $1,000. So we can drop it down to $100 when we launch. That, for me, that is where we should be. All of our investments should be at $100 on launch. There's probably an argument to be made for $10, but we need to make those arguments first. Like for $100, I really don't see that being an issue at all. On our side, we can handle it. We're handling 3,000 people at $10 or fewer people at $1,000 doesn't mean anything. Like there's no difference. Handling 3,000 transactions is pretty small. So there's no real issue for us at all. Some of the things which we're going to be doing after launch, things like wealth analytics. So you can actually start to track how you're doing and building out your portfolio from there. Currently, the version of wealth analytics we got is a map, which doesn't give you enough in-depth information. It tells you that you're invested somewhere in North America or you're invested somewhere in Europe. And while it's great for vanity, it's not really helping you figure out what you want to do to grow your wealth. Social proofing, as we mentioned a few times, in-app messaging, and from there we start prioritization on the features that we think are really going to drive our platform forward. So awesome. It starts becoming a fun journey after that.
So, and again, just to reiterate, I know I said it on the World Partner Update 2 weeks ago, but what you've built out now is you've really built a deep foundation so that we can build modular pieces onto it and have new versions coming out, roughly every 2 weeks from there. So, it's why the end of November becomes so important for us to be able to achieve that. Is there anything else from your side, Gavin? I'm conscious of the time, and I just want to look. There are a couple of questions people have asked, but we'll come back to questions at the end.
Yeah, look, I think one step on that is we're using a pattern known as a microservice pattern, which, I mean, frankly, nobody really needs to know about it. But essentially what it means is that you're building small pieces that are totally isolated from anything else. So you don't, making a change to a small piece is quite simple. Making a change to a huge piece is much more complex. So that's why we've gone for something like that. It helps us simplify our design patterns.
Awesome. Well, I can, safely say that, what's interesting to me is that I've spent 20 years of my life trying to marry together technology and real estate. And for the first time now, really, I truly believe that we've got a team that can take those ideas, take the intellectual property, and actually turn it into a reality so that we're not just looking at screenshots like I showed earlier and really sort of be able to get out there. However, saying that, what's also really important is you can have a wonderful app like Uber, but if you don't have someone driving the revenue and making sure there's cars and people, it's not worth anything. And so I wanted to hand over to Richard and just give Richard the screen, because he's really, him and I have had multiple conversations over the years around some of the ideas of how do we build a global real estate marketplace? How do we drive the revenues? If you look at what Ken showed you, there's a number of key components from a technology perspective that are critically important, but driving the revenue is equally as important, as every other businessman and business lady that is on this call would say. And Richard's got some fantastic ideas around how we can do it. I've already explained who he is. It is 3 or 4 a.m. in the morning, so he's asked me not if he can not put his camera on. But other than that, over to you, Richard. Really excited to have you sharing.
Thank you, Scott. Can you hear me okay?
Got you loud and clear.
Okay, fantastic. Look, following on from Gavin and Scott and Ken, which is for me very exciting. The way I've discussed things with Scott is with the current model, we need to move that into 2019 so that we have multiple streams of income. And I'm going to go through a couple of those briefly. But initially, I want to just talk about the short-term goals that we have set, and if there's time, we'll dive deeper into those. So we basically drilled it down to about 5 things we want to do before the 31st, or achieve before the 31st of December. And the first one I've got on there is, around the world, people pay for an audience. And if we look at our platform, that is really where the people on that platform are the audience, and people who have something to sell, a developer, a supplier, in all my years of experience, when they're putting together a project, they allow for marketing and they look for platforms, avenues, channels, and they make allowances for it. And for example, your local real estate platform, I think it's Property24, in Australia it's realestate.com, that becomes one avenue of your marketing spend. So with that in mind, developers, suppliers, they will pay to reach an audience. So we, in talking to many suppliers and developers over the last few years, really want to get involved because they're looking for that audience. So they'll pay up front, and that's one way to start initial revenue. And that doesn't necessarily mean they have to have a project, but they're becoming part of it. When they buy into the story of the branding, people understanding who they are, getting your name out there, and getting the ball rolling, even if your project's coming in a couple of months' time. So we're not talking about huge fees initially with number one, but when we go to do a project, we really want to start pushing project listing fees. The second one is an obvious one, which we won't go into too much. Everybody understands that one. The third one for me is a big one. I've run the concept past a developer here about the global real estate marketplace, where it's going to go, all the vision Scott's given us, and some of the things that we might have time to touch on tonight. And again, on that sort of level, to allow them to bring their projects on, whether they're raising capital, branding, And I won't touch on too much of what value extras they're going to get in terms of major reports, which will be driven from the data from our investors in the back end. And but I've got one, as I've said there at the moment, verbal, subject to us going ahead. Releasing our version 5, or as Gavin puts it, I can't remember now, version 1, but a super supplier. So they're guys that have got a large pipeline of projects, and they're ready to go, and they want to take part now. And then there's we've broken it down into standard suppliers. So that might be the guys that are testing the platform. One small project here, one there. Again, the same story. The story works. Scott's story has always worked. Especially here in Australia, he's done his events here. Developers come up all the time, tapping us on the shoulders. How can we get involved? So we're going to take that approach now in terms of subscription, so to get them underway. So there'll be different levels. And we just set some short-term goals there, being the marketplace that we are, to get those sort of guys out there and starting to look like a global real estate marketplace. Number 5, if we've got time, I'll deep dive into this one a little bit. And everybody talks about an educational product, but I just want to take a couple of step backs from that. The intention with number 5 is to put together and launch a world-class educational product based around real estate, and I'll just go into that a little bit further. Just bear with me. We'll move past the future global real estate marketplace model. We'll come back to that one, but I've got the 2 rings around the 2 things I'm hoping we're going to talk about at the moment, and you can see education as one of them. So Wealth University, like any education platform, needs to be built on foundations and structure for people who are going to buy into it. There's 2 ways, there's 2 things. I've looked at it at the moment, and there's products on there, there's talk of courses, etc., but there's 2 very distinct things. The way I see it in the future, there will be a store or a library, a bit like an eBay, where you'll have authors having their real estate authors putting their books on there, major reports from various authorities, in various cities around the world, global experts video series, to name a few. But that's more like an eBay store type product. The one I really wanted to touch on at the moment is very much in line with what Scott was talking about at the beginning about education. And I just want to go into what is a world-class real estate educational product, and I want to use an example. There's many examples. There's a woman here who's become extremely famous for teaching people how to renovate a house properly, step by step from scratch. Now that might seem like a very simple thing to say for real estate people, but when it comes to the masses, and I want that word to stick with us, the masses, that's really our market. The masses of people don't really know. There's bits and pieces of information out there, but the key is with these experts is they teach people step by step. And ironically, if I've got her website up there, I'd suggest people to have a look at it. Just to familiarize yourself with her, she's now become quite an authority, and that's the next keyword I want to use, is being an authority. So she's also talks about her education, but she puts her courses in plain and simple terms. Okay, how to, from step 1 right through to step 8. And I think this comes back to the structure I was talking about earlier. And as you can see, just for what she does here, she's got 260,000 members, and she's sold 11,000 graduates. And she's building a community for the masses of people, which is in line with the Wealth Migrate model. Her courses are quite expensive, but again, they're thorough, they're step by step, and that's the key to a really solid product. So what we talked about, what I proposed, in line with that example I just showed you, was with the phenomenal group of worldly experts that Scott has pulled together, we can do the same and make it very, very simple for people to understand, because people hear about blockchain, they hear about digital currencies, but no one's taken it from the beginning and tying it in with real estate over a period of 12 months and onwards. So I'm basically brought up here some of the subjects I think are very, very key. And some of these are based on our own community already, like the exponential technology groups on WhatsApp. You know, you've got the cryptocurrency, digital currency groups on WhatsApp. And if you notice, what I notice is people educating themselves on there. So it's kind of all over, there's no structure to it. So if we have experts on board, and Scott and myself have been talking to a number, and people are getting very, very excited about being part of this now. We want to create a step-by-step how-to course for the masses. And I've got some in blue there that's yet to be finalized, whether they'll be in, whether they'll be out. But basically what we want to do, I've got at the bottom, I'm going to skip through now, is create, with a bit of a twist, to really make an impactful statement straight away, is to come up with a super product. So not have just all individuals like the renovating for profit or the blockchain person out on their own. We combine it into a super product that we can launch on a certain date and give it everything that we've got. And the way it's going to work basically is our target market, our mums and dads, we want to keep it very mums and dads and retirees and teenagers. That's the mass market around the world about this education. We want to keep it very, very affordable, because again, we're talking about educating third world environments and so forth. So we want to make this spectacular, but also affordable. That's the key. And we also, when we're marketing this, we're going to leverage off their own experts' databases to give us that initial kicker. And we're also going to bring in Suraj, who Scott has mentioned many times, is quite a whiz with the digital marketing side of things. And we really want to launch a spectacular annual subscription product, possibly just under $100. With the goal of bringing people in, because in my experience, you can tell people they need to invest in America, from Australia, or you need to be a global real estate investor, but that's just telling you. The key is, in my experience in dealing with large databases of property investors, it's about the education. It's not just about buying a property or investing in this property. You've got to bring in the whys and the steps and bring it all together. So we're going to launch that product. We're going to work very hard and launch that product. Myself and Paul Nadira behind the scenes are going to bring everybody together. And then there's future add-ons from this. What is very popular in countries like Australia, I'm sure it is in South Africa, is there's lots of corporate and business training, especially in areas like blockchain, and now cryptocurrencies or digital currencies, integrations. And these are individual courses that we can expand on and put structure to them and have our experts online talking to corporates. There's also, we will turn these into global mastermind events where all the experts come together, and we really want to create what's not out there, which is the global real estate event or mastermind in major cities, where our guys can come together. They'll bring the audience, the individual city will bring the audience with the marketing, and the way we pay for that is we also bring the local suppliers and developers who will pay for a booth or a stand. They'll pay money to be there to get that audience I mentioned, because they can meet and mingle with potential buyers and sellers. And that's a model that's worked very, very well, and that's something that we're tabling for the future. And sorry, I've skipped ahead there. So that's our laser focused initial structured product that we're putting together. Not a library, not a store just yet, but a proper educational product. As we move along, there will be no doubt other super products that will come into the university, but this is an individual product created for the university that is going to make revenue, not only for experts, but for the Wealth Migrate itself. The other thing in terms of multiple streams of income, and please, Scott, interrupt me here if we're running way behind time.
Yeah, just watch the time if you don't mind. I don't want to go too late tonight.
Okay, I'll just be really quick. A global real estate marketplace should have the best offerings in the world. And a few years ago, I brought Sentinel out to South Africa as an example. They are considered one of the best REITs in Australia. They've got the track record, they've got the history, they've got 40 odd high performing funds running at the moment. They're the experts. And one of the problems with bringing the experts on is we don't understand sometimes in country what is required for those suppliers, not just about us, but what is the hurdles for them. And I've noticed this over the years, and we actually don't make it easy for these guys to get involved. And I've just got in front of you here Warren Ebbett. He's the very famous CEO, and he's posted this out to all his investors. And he identifies a major thing which ties in with what Scott is saying, ironically. I don't know if people are aware, but there's a Royal Commission going on in Australia right now, Banking Commission. They are exposing the banks. They are coming up with, there's criminal charges now for some of the directors of the banks. And it's all based around fee rorts. Well, no surprise there when it comes to banks, I guess. But it's really opening up because of the public pressure. To give you one example, some of these banks have been, with their insurance products, have been charging people who have been dead for 5 years, and they carry on charging them. Now that's a criminal, that is a criminal offense in anybody's mind, but that's just the tip of the iceberg. So what Scott's saying is very ironic, and I hadn't spoken to him about this before, is that things are going to change. And as Warren says, the reason we couldn't bring on people like, I mean, the real top REITs of the world, like Sentinel, is right here in front of us. He says it to his own people. The commissions, the fees. Most of the problems with these REITs and fees is they're top heavy. They promise a lot. They've got huge upfront fees built into them, where that should be going to the investor. And that's what these companies like the Sentinels and that. And we want to bring them on because they attract an audience. And also, I just highlighted something there. What's the motivation for somebody like a Sentinel to be on a platform? Well, he says it quite frankly here. If they cared about the investors, why didn't they at least talk to the #1 independently rated unlisted property fund manager in Australia? So they want an audience. They want more investors. Okay, that's what he's saying, because they're going to grow their business. So the problem is identified there. And we're going to bring these guys on in a different way. If they don't want to pay the major fees that are involved, we're going to look at more of a subscription model, whereby these types of guys will put their projects onto the platform. They'll promote themselves on there. They'll be social proofed on there, and they'll pay a subscription. They won't necessarily pay high fees, but they'll pay a subscription to get to our audience. And I put some other ideas in, down there just to give us I know Scott's pushing me for time, but to give you an example, here in Australia, there are hundreds and hundreds of high quality REITs and funds that would love this story to be on the global real estate marketplace. And our intention is to bring them on one by one, but rather than butt heads with them with the previous model, we're going to fix that and work around it and bring them on one by one, drag them through into the global real estate marketplace, where they can put their performance on show. And the platform, as investors invest into them, they're going to deal with the investors. That's the other key thing. They're going to look after them. We're going to have their key people who know what they're doing upload the information into our platform for us in the future. And the platform's going to gather all of that information from the various investments, the various REITs around the world. But the point being that we're going to stop the obstacle of bringing these guys the best opportunities in the world onto the platform by bringing them into a subscription model. So numbers, of course, well, again, going back to what I said about the supplier and the developer model, they will pay an annual subscription of $50,000 if that's the model, if that's the story, and we want to do it one by one, as I said. Scott, I have other stuff, but I know you want to move forward, but is that good for now?
Yeah, I think just quickly, in terms of the other stuff, just tell me quickly the headline and what you wanted to go through.
You mentioned the future of the global real estate marketplace. I just wanted to use...
Oh, okay. Just do me a favor, if you can wrap it up in the next sort of 2 minutes or so, then you know, if you want to run through it quickly. I'm conscious of the time, and obviously Hilda, you know, is anxious to share as well, you know.
Okay, 1 minute. Everybody knows the house website in America, and I think you know this very well, Scott. 40 million users. The way basically we want to have multiple streams of income is to bring forward a subscription model where people will be able to list their properties for sale, even lease in the future, if they have a portfolio to sell, and importantly, if there's a service. So as a global real estate marketplace, it's not up to the REIT to be the accountant. You need the individual specialist to come on. So again, lawyers, accountants, immigration agents, if there's an audience, they'll pay a subscription, and our members, our people, will be able to tap into the best of breed service providers around the globe in any country as we move forward. So basically, that's my very quick vision of the future in terms of the subscription model. There's obviously advertising. We've covered a lot of, but hopefully people get the picture in terms of the multiple income streams. Thank you, Scott.
Last question. You've spoken and got extensive experience. I mean, you found me through, you know, an affiliate channel partner model. Just explain quickly how you guys doubled sales in, you know, 12 to 24 months, right in the height of the crash. You then did it, you know, up in Southeast Asia, and even the affiliate and channel partners that you've got in China and India. You know, just talk about that affiliate channel partner strategy that you've so effectively implemented in the past.
Yeah, sure. That was about scale too, Scott. So basically, the way we look at it, we have a product. We knew what type of people were going to buy that product, but who else had those people that would buy our product? Meaning, is there other groups, other partners, other channels, as I mentioned before, that would have the same clients, and we could go to them at the very point and they could market our product on behalf of us, and we share on fees and revenues to get the scale. So in very short, that's what we developed, a channel partner system, not an affiliate system, but a channel partner, which is a licensed sales company, if you like, licensed to sell real estate or investments, financial products, and they have their database. And we wanted our product to go out to their database. So if we could bring on, instead of chasing 100 people, clients, we chased 100 channel partners. We ended up with 395, but we chased 100 channel partners who each would have 1,000 clients. So it was about scale. And so that's the model in very simple terms, Scott, and obviously needs a long discussion on how it all comes together, but it's about the scale.
Yep. So let's go. If people want to stay online later, we can talk to that. I wanted to quickly just share one screen and then hand over to Hilda. This is about the wealth movement, and it was 5 years ago. Hilda and I were on a bus off to a game park, and we started talking about life, and you know, and we realized we had similar passions around wanting to have a big picture purpose on the planet, and particularly, in Hilda's case, empowering women. You saw tonight, even on the stats, that women are more and more becoming the people who are making decisions and who are wanting to take active control of their lives. And what was fascinating to me is that Hilda and I did a lot of time working on this wealth movement and the big picture and how we could empower 1 billion people. And it's over the last 2 or 3 years, it sort of wilted a little bit, and and people certainly didn't seem to have the passion. And what was fascinating to me was in July, early July, just before Hilda immigrated, June actually, she said, "Scott, I'd love to get together with you and another lady that she's invested with. I want to get together with you, and I want to share my big picture. It's called an MTP, a massive transformative purpose, and I want to show you how it integrates with the world movement and what I see. And if you don't mind, Hilda, I'd love you to share that, because I think it's really important for all the wealth partners to reconnect with our purpose and what the big picture is. So if you don't mind, I'm going to share my screen with you. Are you ready there, Hilda?
I'm ready. Are you sharing your screen, or am I going to share my screen?
I'm sharing your screen. So you should just be able to click accept screen.
I did. Let's just quickly see that. What can you see? Can you see my screen?
Yeah, so we've got your okay, there we've got the little road with orange and yellow and green.
Yeah, so I just want to, this presentation was just for personal disclaimer, was not for sharing in a bigger platform other than a couple of people that I deal with. So I just want to disclaim, it looks like a bit kindergartenish, but as I get more comfortable with my vision, I guess I can, it will get better. So Scott asked me just to share the big vision. My road hasn't been a straight line where I'm now, and my next journey and my next life has just started. And it's really an honor to share as I get comfortable with my crazy ideas and I see the world, share it with others. About 5 years ago, I got involved and started looking at technology, how technology is changing. And it's really was more to understand the world my children's going to face and how to be a better parent for them. And I got absorbed in the digitalization and part of the Amanda's Abundance 360 since. And I think right now where I am is I definitely understand more than most people my age, certainly, about where the world's going, where technology is going, understand more than most parents and even business people. And that came from a linear age and has to change their business in this digital world. So when Scott and I started talking about where do we see the world and where we're going to take the business, I think, and how we're making our impact, I wrote this poem. I don't know who's seen it, who even remembers it, about imagine that world. And I guess this is the basis of everything I do, the basis of my investments, the basis of what I'm busy learning, and how do we impact 1 billion people? It's easy to talk about 1 billion people, but how do we actually do it? So my life strategy, I've actually put that I'm really good at taking big pictures, taking the dreams, taking things out of thin air and put them into phases and steps. And I had to do this to be clear on my strategy, where I want to invest in, where I want to play, because my time, people demand my time a lot, and it becomes really, really important for me to decide where I want to spend my time. And I think...
Hilda, we lost your screen now. I don't know where it went, but you...
Oh, there? That one? Oh, maybe that one. Is it back on?
Yeah, there are.
Sorry about that. So, and just to understand business, Sears this morning on the news declared as a business, 150-year-old business, is declaring bankruptcy this year. So for investors, for people to understand where the world's going, you need to understand how that will impact. You think a business of 150 years is the place to go and the place to where you're going to invest. And those investors, I think shares just today already dropped by 40%. So based on that, combined with basing on being a parent for my children, I put where I believe humanity is going into a couple of steps and creating businesses. Peter Diamandis says, if you want to create or predict the future, the best is to create it. So I guess I set out and take on this massive purpose and creating little moonshots around those. So the 3 phases, I think, of humanity, doesn't matter where you are on the pyramid, is our money. We all want to create a better world for ourselves and for our children. We want to, and everything we do is with that purpose in mind. Doesn't matter if you're from the poorest to the richest person. We want to have a better life than what our parents had. We want to give our children a better life than what we have. So in order to make this biggest impact, we need to look at the money. I just want to quickly get to my presentation here. The 3 things, 3 industries, I believe that's the biggest impact, and we all know about it. It talks fintech, money. When people are brought into the global economy, they can do certain things. Once they bring it into the economy, they have developed an insatiable need to spend that money, to save and to invest. The next one, after they have money and after people are bringing into a formal financial platform, they want education. And after education comes a better quality of life or healthcare. So these are the 3 biggest interests, and wherever you read, you will see there's stuff happening in education, there's stuff happening in healthcare, and there's stuff happening with money, financials, banking, business. Those are probably the 3 biggest conversations and industries that will be developed. So in order for us to really make a difference, or for me as a person, is I believe what we will see is we'll see a massive amount of digitizing of cashless businesses, cashless transactions, cashless countries. Within that, if you go cashless, you need to create remittance systems. You need to be able to transfer money from one place to another. And this is where our number 1 and 2 is where we're creating really exciting businesses to be able to do that. And then once you can bring the prices down for remittances, for people to be able to transact, you can actually bring in financial products and then investments, where obviously what Migrate will be playing is the real estate investments. What holds most technology companies back to access the markets that they really want to access, and where the real impact will be, is they cannot access those markets. They cannot access those markets on a financial and monetary level. So when you create those platforms and those solutions, you can literally bring anything else in. And I also think why that is really important to look at our banks and almost makes banks obsolete in this process is just between United States and Mexico, $56 billion are being transferred between those 2 countries, or being remitted from person to person. That's not even global transactions. You bring that cost down from 5% to 15% to 5%. You free up $21 billion. People will spend that $21 billion on something else. So it's up to us in our collaborations to make sure we offer them the products that they can spend things on. So once they can spend money, once cash has been freed up, they will start looking at how can I save my money? How can I make my life better? Where can I invest my money? And that's where I believe the education platforms will come in over the next 2 to 5 years. I think we can bring in a whole collaboration of education and bring in those people, because they sit with the same. There's a passion for education, but how do we access the markets we want to educate? So that's my 3rd phase, is the education platforms that we will really see should become on board. And once you have the education platforms and you have a couple of 100 million people on your platform, you can then talk healthcare, better quality of life, and making a difference. So if everybody wants to know how do we get to that billion people, this is the way, through the merge platforms, and this is where I see my role and how my life will impact a billion people, is dealing with people like Scott, with all the other companies that I'm involved in, creating these products, creating platforms that we can merge and all access a billion people. How I also see it is, in a little money, with people bringing people into an economy. They say it's the best times in the world, it's the most peaceful times We have the biggest middle class the world's ever had. Yet 5 billion people are still living in poverty, still without bank accounts, still needs to be educated. So once we bring them into a banking economy, we can bring them into the educational economy, and then we can bring them into the quality of life economy. And my job is to see where are those technologies, how can we converse or all of those technologies together and make an impact to our billion people that we want to impact on. So the progress is we're dealing now with individuals, then we will start the emergence of our community platforms, and eventually people will be part of a global platform. And then really just to blow your mind beyond the imaginable, we're going to sit with food production issues and then a sustainable planet. So I think we can really create collaborations, and everyone's passion can be built into our community. So I know this is a Wealth Migrate forum. This is my personal journey and passion, and I'm one person. So if anybody want to make contact with me, want to join or share ideas and create how we're going to create a better future for our children, for ourselves, please send me an email. I'm probably developing my ideas over the next few months. We're heading to the end of the year, but certainly by 2019, we can all start working together synergistically and, get on board on making a difference to those billion people. I think I'm the only person staying within my 10 minutes there, Scott.
It's because you're in America now. You have to be efficient in America. Thanks very much, Hilda. It's wonderful. It's wonderful. You sharing that, and when you shared it with me, it was so valuable, and I just thought it'd be valuable for the wealth partners because, for me, profit and purpose nowadays are the future of business, and with your drive and you wanting to drive the wealth movement, which is absolutely fantastic, and it just brings it all back together for everyone, which I think is critically important, and it's a real honor to have you on the board as well. So thanks for that. So I just want to wrap it up. As Hilda joked, we had an agenda that was supposed to be done in an hour, and we've run over. People like Danae said we should go deeper on topics. So if you are interested in any of the topics we've dealt with, please just type in there the topic, and we maybe need to do one-to-one sessions, with any one of the people that have actually run through it, because obviously it's a huge amount of information in a short space of time. I want to wrap it up, and then we'll go to Q&A. So why is this message different from 12 months ago? Some people might be sitting there going, "Oh, I've heard this before." I think there's 5 critical components. The first one is the tech. Okay, I did mention the numbers, but 12 months ago we had 1.5 people in our tech team, and we had 12 people in our due diligence, finance, and compliance team. That's wonderful if you're wanting to build a property fund or a REIT. We've now completely changed that with the restructure. We've got 22 people in total in the Wealth Migrate team, of which 16 of them are technology and digital, etc., etc. It's the way it should be if you're building a technology company. And like I've already said, we've got a team that can execute. I honestly believe this is the greatest opportunity ever in my life to be able to execute now, because we've got the tech team, they've got the ability, you've got a leader in Gavin, and I have no doubt that we can turn this vision into reality from a tech perspective. Then in terms of driving the digital demand, we've shown you do it through education. I've built this business for 15 years on education-based marketing. It's not about selling products, and that's why we've launched the Wealth University. There's no need for expensive travel trips anymore, because we can do it all digitally and scalable. I can sit here in my house and build courses. In the next month, I'm going to be building 3 more courses. I'm going to be building the beginner course, the intermediate course, and the advanced course, so that we can really scale now. And as you've already seen, we've had over 200 people join just in the last 24 hours. And they're coming in because they want stuff that we've got. And that is, so easy to take them up the participation scale in terms of where we're going. In terms of the leadership team and the board, we've obviously had challenges in the past around, are we a property company? Are we a platform company? Now there's no challenge. It's single-minded focus, building the global real estate marketplace. And really, I've spent hours and hours with Richard and Ken in the last couple of weeks, and I just wish we could spend 3 hours with Richard going into the depths of how we build that global real estate marketplace using what is already in our resources. In terms of a core focus team, we've now set it up. We've got the PMO in Linden, and the analogy I like to use as a PMO is effectively a flight conductor where there's planes flying all over the place, and making sure that they're all doing it in the right way and not crashing into each other. We've got Gavin in terms of the technology and the CTO. We've got Richard in terms of a CRO, which is someone just focusing on revenue. And whether he talks about channel partners or affiliates, supply or demand, it doesn't matter, because you've got to bring all that together, even the World University, to make revenue. And then, obviously Ken Williams in terms of head of strategic finance and everything he's doing, including institutional going forward. The good news is as well is that we've moved out of South Africa. We've only got 3 leadership team people in South Africa, with the majority now overseas. We really are driving best practice. We want to have best practice around the world. And a good example of that is the Agile and Scrum methodology, where, in South Africa, obviously people, don't like, experimenting, and often failure is not celebrated. Whereas if we want to, emulate the best in the world in terms of best practice in Silicon Valley, it's about experimentation, it's about failure, it's about failing fast and going forward. When you look at the wealthy coin, some of you might turn around and say to me, Scott, you embarked on something, you failed. I would challenge that, and I'd say, well, if you think blockchain is part of the future, if you think tokenization and securitization of assets is part of the future, then we took one step in the right direction towards that. Sure, we learned some hard lessons, but we can regroup and we can come back stronger in terms of where we're going. And ultimately, it'll unlock the passion and the purpose that people like Hilda have been talking about. And so it's really important in terms of that. And then lastly, to come back to what Hilda shared with us, I love that poem that she wrote. I think it sums up our purpose, and we've realigned back to our purpose and being able to achieve our purpose in terms of where we're at. That's the team at large. With regards to the macroeconomic opportunity, in the next two years, there's a lot of people, whether it's Ray Dalio, I highly recommend the book, this book, you can download it for free, or whether it's Paulson or anyone else, they're talking about an economic correction in the next 2-3 years. And what that means is that people are going to want to invest in income producing assets. Airbnb got going because of the last crash, because people needed money to stay, and so they let people stay in their houses. Uber got going because people were prepared to do second jobs and drive cars. And we are perfectly positioned to take advantage of this, to allow everybody to be able to invest in good quality assets that were previously only available to the top 1%. Secondly, markets are being disrupted. Fintech and blockchain companies are now making real inroads. There was the IPO of Funding Circle just a couple of weeks ago in London for 2.4 billion. It's starting to have a material impact. And thirdly, the last massive transfer of wealth was the Big Bang. And that's when 40 years ago, the stock markets cut out all the middlemen, and they allowed basically people to invest in the stock markets around the world using technology. Well, it's happening right now in real estate. And as a company, from a Wealth Migrate perspective, we're at the epicenter of all 3 of these major disruptive trends, which provides a great opportunity for us as investors. With regards to a participation premium, in 2015, we basically came up with our wealth collaborative economy. And there's a formula that if you're getting something in return, a financial return, and it involves a purpose, and you can participate, it's called the participation premium. And something that we haven't done well in the last 2 to 3 years is really drive this. And it's one of the reasons why a lot of what Richard spoke about with the mastermind, we've got the mastermind in the real estate space, and looking at due diligence and how we can really scale that and ultimately have community diligence. People that are interested, that will be a mastermind. We've got the blockchain and the exponential technology, so that people can get more engaged, they can really help more, they can participate more. And what that will do is not only give them the financial return, it'll give them the purpose and that participation premium. And so this is something that I believe is the biggest value add for us as wealth partners. And then what's in it for me? Well, as Ken showed, if the wealthy coin had come through, the share price would be north of $4 now. If the portfolio sale had come through, it would have been closer to $5. They didn't come through. Okay, and what lessons can we learn from that? Well, if we take Amazon, when it listed on the stock market, it was $18 a share in 1997. Now if you invested $100, it would be worth $120,000. If you invested $10,000, it would be $12 million. And if you invested $100,000, it would be $120 million. And as Ken Williams pointed out to me today, that's at the listed price. We're still way off listing. We're talking down by $1.50. So you're looking at a 12 to 18 times return just to get to listing. But what's also important is it didn't all go uphill. Basically they also had a wobble. And when the .com boom bust happened, they went to $6. Now a lot of people out there could look at this and go, well, that's a travesty, it's a disaster. But the people that wanted to look long term, didn't see it from a scarcity mindset. They saw it from an abundance mindset. And I'm sure everyone nowadays, You know, I was looking at a site just today where one of the most famous women in the world said her greatest regret was selling Amazon. And, you know, for me, you know, don't you all wish that you'd bought Amazon at $6? And maybe when you look at the reset and the restructure that we've gone through, it presents, you know, for some people a major problem, but for others it could actually present a massive opportunity. Because what about if we're building the Amazon of global real estate? You know, really the question I've got is, can you afford not to be part of this? In terms of how can you benefit further, you know, the request in terms of from the wealth partners is that, you know, people invest in terms of the whole Seeders campaign and where we're going. If they invest $10,000, they will get all the wealth in the circle, all the stuff that Richard has shared free in 2019 for you and your family, and that includes Willem's course on exponential for children. If people invest $25,000, they'll get free access to the mastermind in an area of their choice. If they're wanting to do an anchor investor that Ken Williams has already discussed, then obviously you can speak to him directly. And it does include previous investments. So if you've invested, you know, $200,000 and you invest another $50,000, then it gets you over the threshold and you'll get the discount. If you've already invested more than $250,000 or more than $500,000, you get the discount anyway for whatever you put in. And you'll also get free access to any of the Wealth University courses in 2019. And if you're super educated and know everything and you want to empower your children or someone, you know, someone close to you, then that's fine. You can do that as well. And for those of you that can't necessarily invest or don't want to invest, you know, my request is that we, you know, when you take a chain, you're only as strong as the weakest link. And my request is that if each and every one of us wealth partners made a commitment to be, you know, good for at least $10,000, whether we put $10,000 in ourselves or whether we got 10 friends to put in $1,000, you know, that would equal $1.37 million in itself. And so, you know, my request is if you can't physically invest yourself, then please go out there, use the Seeders campaign and really help people to be able to participate in this. You know, I remind you of what I said earlier. The energy of a new power community is driven by its super participants. It's you and I, it's the wealth partners. This campaign will not succeed based on Ken Williams or Scott Picken. It will fail if it's just down to us, because that's old power. New power is all of us participating together and making it work. And I'm putting my money where my mouth is. You know, I'm effectively putting another $75,000 into this campaign in terms of this process, in terms of where we're going. You know, the high road, you know, once we're successful with the Seeders campaign, it allows us to have really aggressive growth in 2019. You know, we're looking at the share price of $4. We can take advantage of a generational opportunity. The impact can be large, the value creation can be large, and we can be very purposeful. If we don't, and again, as a community, we don't come together and you know, then we continue to sort of, will next year, you know, if you take my focus, 50% of it will be on funding and cash flow and, you know, trying to sort of keep the business going. The share price will probably stay fairly similar. You know, we'll have more delays and we might, you know, from a tech perspective, miss it altogether. And you know, for me, it's just not an option. Like, we've got such a generational opportunity that we should take advantage of. So in terms of the next steps, I'm going to put up a poll now, and you know, people can just fill in what they're thinking in terms of what the next steps should be. I really would ask you to understand the gamification of Seeders. So there's a picture of me. I was in Bedford, which is in the Eastern Cape, which is, no disrespect to Nadine and Kim who are online, but it's the middle of nowhere. But they got me there. They got 40 farmers there. We've had over $100,000 committed already just from the people that were there. And so, you know, the gamification of Seeders, that 60 days that Ken talks about, every week it's down to the number of investors per week, the transactions, the size of transactions, and the percentage change. And so we need your help so that we can consistently be winning at this game. And it's going to be a game for us to win together over the next couple of weeks. And then if you're interested in the UK, a lot of people asked you about it. We've got a webinar next Tuesday where we've got some of the best partners in the UK talking about the opportunities in the UK. We've also got a lot of people talking about immigration. We've got the golden visa and immigration. We'll be looking at Australia, Portugal, Cyprus, and America on the 13th of November. Again, a marketplace. If you walk into a shopping center, you've got a wide array of selection of quality, trusted products. And building the global real estate marketplace ensures that we've got all those type of products in the store. And then finally, in terms of being part of creating the world you want to see, I basically wanted to finish off with a story for you. And it's a story I heard many, many years ago. And it was an old man, and he's sitting, you know, in a village. He's a very wise old man. And there's a young boy, and this boy, you know, wants to basically go and test this old man. So he walks up with a bird, and he's got this bird in his hand. And he says to the wise old man, he says, is this bird dead or alive? And the wise old man thinks about it for a while, and he thinks, well, basically, if I say it's alive, you're going to crush it in your hand. And if I say it's dead, you're going to open your hand and let it fly away. And so the answer to your question really lies that the answer lies in your hand. And my metaphor for that story is that where we sit, everything that you've seen, everywhere that we've come from and everywhere that we go, lies within the hands of us as community members now. We have the choice to throttle the opportunity, the generational opportunity, or we have the choice to open our hand and to really let this opportunity fly and to turn that vision into reality. And so that's all from my side. I really wanted to thank, Ken for everything that he shared and prepared and doing behind the scenes in the UK. It really has been wonderful. For Gavin and everything that him and Lyndon and the entire team are doing in terms of growing the marketplace and everyone involved, all the tech guys, Nia and Lee and everyone from all over the world, Ken Hu in China and Paul Nero. I don't want to forget names or leave people out. And then Richard didn't even get to the tip of the iceberg of what he's thinking in terms of the global revenue and how we can grow our revenue and ensure that we hit our revenue targets not only towards the end of this year but next year and beyond. And I'm super excited about what that brings together. And then finally, Hilda, I think you brought it together beautifully at the end in terms of how we can bring people, passion, and profit all together and ultimately live a purposeful journey. So thank you to all four of you for sharing. To all the Wealth Partners, thank you so much for being here. I'm really sorry it went on as long as it did. Sorry, while I'm thinking about this, I'm just going to put that poll up. And most importantly, from my perspective, I look forward to you giving us feedback, about the good, the bad, the ugly. If you want to go deeper, if you want to know anything from any one of the people that have spoken, including myself, then that's great. Our three core values are trust, transparency, and alignment. We want to be able to live up to those core values. And I think it's really important that we go deeper in terms of that process. I'm going to look at the questions quickly while I leave that poll up for people. I'd appreciate if people can give us the poll. So let's just look quickly here. Okay, so Amanda asked us about the fee structure and about the typical REIT, and it's all about fees. And so for us, Amanda, our fee structure is very simple and very clean. It's never more than 3%. And in terms of going forward and on the platform, it's going to be completely transparent, including where for the suppliers, like Richard Dunn said, there will actually be sponsor fees, etc. And we effectively monetize the supply side. It's really important that if you understand how Airbnb works, their primary clients is the people that actually own the houses. So like my wife and I do our Airbnb house here, and they never charge more than 3%. It's a flat 3%. So if we're getting 1,000 rand a night, then we know that Airbnb is making 30 rand, and that's exactly how we're going to do it for the investors. It'll never be more than 3%, and we will be also monetizing the supply side, and that is all being clearly put up now on the platform. And I can share the model if you haven't seen it with you. Danae's asking why only 2 million. Danae's, from a Cedars perspective, whatever our target is to raise, if we don't raise the full amount, then they can actually cancel the entire project. And so it's quite important for us that we set a reasonable target. Even if we only go for $500,000 or $1 million, and then you can overshoot the mark and get 2 million plus. We don't want more than 3 million because we've basically set a cap on it, because obviously we've got heavily discounted shares based on the fact that we were able to, what's the special word, Ken, that you call, get shares back, so we're not effectively diluting people in the cap table. Clawback, sorry, thanks, Ken. I'm tired, my brain's shutting down. What's happening with the share certificates? So that's exactly what I was talking about, Denise. It's all going online now, so that we're not hassling with postages and all that, and it's completely transparent and timeless in terms of that process. How about a comparison graph between your investments in one graph? So Denise, I think that's really important. Now that Gavin and them have built the base, and that we're going to be bringing out an agile methodology every sort of 2 weeks, we're really going to want community engagement to come up with ideas on how we can improve the community, the investor experience, and that's going to be a major part of going forward. However, saying that, Gavin wants to make sure that we've got a working version 5 of the platform where people can seamlessly invest from small amounts of money quickly and easily, and that's really going to be our focus in terms of the end of November, and then we'll bring on all the extra additions in terms of that process. So Amanda said, love the ease of buying now. So what's the most important thing to focus on? Lots of small investments on Wild Migrate platform. In that case, we need one great investment that's pretty much overperforms after tax, as who know about the stuff, right? And next performs, not bad news. So I agree with you, Amanda. And we are looking at some, what even to some point, some ego properties. And what I mean by that is spectacular. We're looking at a project right now in Manhattan as an example that really will catch people's attention. Okay, so Denise is saying a graph showing how the investment is tracking against the target. I agree with that completely, Denise. I'd love to, even if someone says they're going to make you a 2% return, what's important is, are they on track making 2%, yes or no, and the transparency of that. So Pierre's asking, what can a new investor to the platform see? Pierre, I think, one of the things that you're saying, and you're 100% right, is to show track record and build trust. And that's one of the most important things we'll be focusing on. Remembering we won't be able to achieve everything by the end of November, but it'll all be coming. And hopefully I've shared with you a bunch of the pages, because the tech team is programming. There's also a lot of work being done in preparation to share with them where we wanted to go. So again, Pierre said, if we could show the performance of, medical 1, medical 2, etc. So that, and if you remember, like Gavin basically showed you the first page, which had a huge amount of blue space on the left-hand side. The idea would be to bring stuff up there to be able to show people and build trust, basically. There's one word that we need to solve, and that's building trust. Amanda and I were missing each other a couple of times here. I did try and answer her in terms of how we can do it. I didn't fully understand, Amanda. So Denise said a separate webinar for Richard. So I agree with you. Richard really needs a 2 hours just on his own to go through the global real estate marketplace and how we can bring it all together. What he didn't mention is he's got a contact in China that has 28,000 family offices. I think, Richard, if I'm right, 28,000 financial advisors. I don't know how many offices it was.
Sorry, Scott. I think you mean India.
India. Did I say?
Yeah. China.
Oh, sorry. Yeah. So India. Just tell us for 30 seconds about that.
Yes, it's the largest financial planning company in India. They have 2,500 registered financial planners spread out across the country. I met them in January about potentially, I pitched to them potentially about becoming a channel partner, which of course we weren't ready for. They were in Australia, their whole team, 6 of them, here in Brisbane, and they were looking at Australian opportunities in terms of property. Obviously, being a financial company, they have more than just real estate, but yes, and we're looking at continuing those talks to see if we can bring that together at some stage.
Perfect. So it just gives you a good example of, the focus on, emerging markets like China and India. I know you've also worked with a company in China that, was doing thousands of units into Australia. So it's really a model that you fully understand. And we really want to be able to scale that now. So not just going out and finding our own investors, but finding partners that have access to thousands, tens of thousands, hundreds of thousands of investors. And it's really, one of the key focuses in terms of where we're going. And I don't think there's anyone better in the world that I know to be able to do that. Ann Wilson's asked, where do we find professional materials to aid conversations with friends in investing? So, and the good news is on Cedars is that once it goes live, everything will be there. The pitch deck, the one-pager, everything. What I will do, though, is on the Global Wealth Group tonight, I will put up the one-pager. I will put up the pitch deck. I'm also going to put up this PowerPoint, so if anyone's watching the recording, they know they can go and find it on the Global Wealth Group, so that you can get access to the PowerPoint if you want to go through it. And if there's other material people want to, get access to, that must just let us know in terms of that process. Reminding everyone that we do have a data room, a secure data room that all wealth partners are already signed up for, and we've got our audited financials and everything else there. So if you want to go and look at the audited financials and you don't know where they are, just ask. But we've got a data room. It's protected for obvious reasons, but all wealth partners have access to that, and they've all got their own separate logins, and they can go and check that information. Okay, I think we are nearly done in terms of everyone's thoughts and conversations. One thing that Hilda said to me yesterday is that it's really important that when you're planning your investment strategy, you need to play to where the puck is going. There's that famous conversation with what's the guy's name? I don't know if you can remember, Hilda, the most famous ice hockey player. And he said to someone once, they said, why have you won so many awards? And he said, well, most people play and go towards where the puck is, and I go towards where the puck is going. And I think it's a great metaphor for what we're trying to do in business. Hilda shared a huge amount of insights in terms of where the world's going. And there's no point in building a business for today. You need to build a business for tomorrow, because that is where the puck is going in terms of that process. I think the other thing in terms of why are we doing seeders? Someone asked here, why seeders? For us, it's very important to use new power methodologies. We want to use things like crowdfunding and empowering the community. We didn't want to use old world methodologies and things like that effectively are taking us backwards, and allowing the shareholders to participate. We also haven't just handed out sweat equity to people. Anyone in our company, and that gets approved by the board, the sweat equity is based on specific KPIs that people need to achieve, and that's really important in terms of the process. So it's all about new power, it's all about results, and it's all about looking after the community, the shareholders, and the investors, and allowing everyone, again, trust, transparency, and alignment, allowing everyone in alignment to win. Ken, you mentioned to me that you didn't talk about now, and I know we have a time, but if people are interested, they can hang on, about the company you spoke to yesterday in Canada about funding. You didn't mention that.
Yeah, Scott. So it's OCMX, and it's really exciting. The question that you just had with regard to why seeders, this is what really excites me, is that by doing something with a seeders or an OCMX, it means that we are able to proof ourselves. We're able to proof our metrics over a period of time, without selling the crown jewels at a low price. So, if we can do this with seeders a couple of times, or we could go to OCMX. What's so exciting about these guys is that what they've done is they've created a site that actually says to high net worth individuals, like a lot of wealth partners on this call, if you would like good companies to invest in, put down into your profile here what you would like to see, and we will send you those companies. They raise between 1 and 20 million at a time. Their sweet spot is between 5 and 10 million. And for that 5 or 10 million, they normally take in, say, 10 investors. So they've got a bunch of investors that are waiting to pull the trigger on something that they really like at a high level. And so now it doesn't affect the Seeders campaign. It doesn't affect any of our global geographies. It's fully regulated, and we could go to them and look at an audience that we've never been to before for fundraising. And that's the bonus of them. So that's something that we could build into our plans. The other thing that they do is they will also fund via they'll fund a mezz debt type product. So in other words, say you don't want to invest as an equity partner, all you want to do is you want to put in into a debenture, and you'd like to earn, I don't know, 8 to 12%, for example, in hard currency, but in basically a bond. Well, you could loan to the company. So basically, we could raise mezz debt funding next year without diluting our shareholders at all. It's debt funded. So these are things that we could do. We could make that debt funding convertible if we wanted to, and so on. And so they offer a proliferation of things we could do.
Awesome. So if there's no more questions coming through, which I think we've answered everyone's questions, from my perspective, I just wanted to thank everyone tonight. I know that it's been a long session, and Richard, you've been up, in the middle of your night. Hilda, you were up really early, and Gavin and Ken equally. Thank you for participating. For everyone that's been online, I really appreciate you being online. I appreciate you asking all the questions. If you've got any more questions, please reach out to us. Like I said to you, just don't forget the little bird in the hand, because we're sitting with a generational opportunity. We've got the team, we've got the vision, and we just need now the capacity to be able to execute on that vision. And I have no doubt that we've got the team to be able to do it now. And we've got the Cedars opportunity that Ken has so wonderfully set up for us to be able to allow that as the catalyst. And on that note, thank you to all of you tonight, and look forward to chatting to you in the next couple of days. Cheers.